Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 29th of October, 2018, about 3:50 p.m. Central Daylight Time. Another day where the stock market tanks. And with it, it took a number of markets with it. Grain markets were mostly lower. Harvest progress continues. You know, we're in that wind down period. I don't know how the trees outside your homes look if you're in the Midwest. Mine are bright red and shedding like there's no tomorrow, so that's always a sign that harvest is well underway. You can see the energy markets falling. It was a red day in a number of markets today, and once again, it came about as talk started coming on that if President Xi and President Trump at the upcoming G20 meeting in November don't make a breakthrough on the stalemate that's going on trade, that the Trump administration in December will announce tariffs on the remaining $257 billion of goods. It takes 60 days for public comment. That would be February. That will weigh on grain markets and other markets as well. All we did recently, if we look at the weekly area chart of closes, is get up and over that 18-week, which is good. First time that it had done it in a while. You were over at the week of October 19th. You were over at October 12th. And on the week of October 5th, if you take a look, you were just there too. And with this now today, we're back under. So you were unable to clear these upper areas here. And the question is the 811.5 area a target, or is the market just selling off a bit and not going to go that low? One of the things that you did so far this week, and today's only Monday, is for the day, you have an outside day down. If we come to the week, you obviously am not showing the highs and lows of the week, just closing prices. But for the daily chart, you have an outside day down. Now, there's two parts to that. The first part is when that occurs, it becomes a potential swing line high, which means you now have lower highs, lower lows. The second part is if that number is taken out on Tuesday or Wednesday, it's often a sign of a bear trap, and markets start to rally. Where might they rally if that occurred? One of the numbers would be the 18-day average of closes back at the 875.5 level. So, barring that, if the market goes down, where might the market be headed to? Maybe the Bollinger Band. That number is 846.25, about 6 cents lower. That's the likely target if you get the downside momentum. Does that mean you can't go even lower? That's not what I'm saying. You certainly could, but that would be a target. And you now have a market in oversold territory. Anytime you have readings under 20, and they're not going sideways under 20 for several days or more, which they're not here, you're just in an oversold area. So hit that number of 846.25, and one of the things I would be saying is that's it, you've hit your downside target. Bring out more information that Presidents Xi and Trump have no intent of talking or settling anything. It's not going to be very good for the market. In the meal market, you can see that both numbers are under 20, so you're oversold. The market today tried to bounce. You were up 90 cents on the day. So unlike the bean market, didn't give anything up there. But soybean oil just keeps slipping away on you. This is called riding the lower Bollinger Band. It's very bearish. It's when a market doesn't get away from it. And while you're oversold with both numbers under 20, what happens is you can get to the point where then they go 3 days in a row, which we're not at. We're only 2 days in a row. This was Friday's action, and today, then they embed. Embedding means until the red line gets back over the 20 level, each rally is an opportunity for bears to hit it. So we'll see if that happens. In the corn market, you're fighting a battle at the 100 and the 18-day average of closes. You can see the 18 just got under the 100 here again, only by a quarter of a cent, but under it. Momentum in the market is flat. The trend is down, lower highs, lower lows in the market. You've had that This is still bearish action. In the wheat market, you got up to the 18-day average of closes, and you know I call that our line in the sand, and the price just stopped on the rally. That's what I often expect it to do. The market now has to make a determination. Is it going to resume to the downside, or is it going to try to kick up a little bit right here? In the sugar market, looks to me like a top was made. Yep. Lower highs, lower lows, outside day down. I'll be very surprised if price and the 18-day average of closes don't immediately hit each other. I'm looking for the shorts to be hitting in that market, but if you take out today's highs, I would look for the shorts to bail. So until today's high is taken out tomorrow or the day after, I think the bears have grabbed control of the market. The trend is not down. The bears grabbed control. In order to get control proven, they got to close under the 18-day average of closes. Momentum, the bullish embedded reading, was lost as well. That's why I'm looking for the 18-day average of closes. It took a little longer than I thought it would do in the coffee when you lost the embedded reading back here, right here, to hit that 18-day average of closes. But it's a good rule of thumb, and you can see how the market played around and all of a sudden it lets go. That was your warning sign, and I have the same warning sign in the sugar market. In the cocoa market, you're overbought. It never did what the sugar and the cocoa did. It just got into overbought territory. You have a higher high, lower low pattern that is not a trend. You have two areas of resistance. The green line, the 100-day average of closes in the upper Bollinger Band, with support back at 21.47, but I'd call this a non-trending market. In the cotton market, harvest is going well. I just saw the numbers on that. You've got lower highs, lower lows. Today's close puts you back under the 18-day average. The bears grabbed back control of this market until today's high is taken out. A potential target is the lower Bollinger Band with momentum pointing down. In the cattle market, we have been fighting day after day after day at this 18-day average of closes. One moment it's down, the next it's up. Right now, I still don't see a trend. You've got a lower low and a higher high pattern, fighting through here with narrow Bollinger Bands and momentum that is flat. I think it's a confused chart, looking for direction. I'm going to make the same argument about feeder cattle. With a higher high and a lower low, it keeps fighting at the 100-day average, not the 18. There's a difference here as to where the battleground is. I don't see anyone in control of that as a chartist. The hogs still being controlled by the bulls here. A vertical price rise met by an inside day on Friday and a surge. Can you get up to the other Bollinger Band? Yeah, you might be able to at 59.65. You're overbought. I look for some profit taking to hit that market for absolutely no reason other than it's getting close to that number. You're looking at my telephone, and this is how I set it up for my agriculture markets. So I can set it up and start looking at whatever I want, where I want to look at them. I'm talking crush spreads, I'm talking the different chart action that I want to go. It goes back and forth in here. And that's the beauty of what we try to do for you. We try to get you to a point where on these different markets you're able to look at all kinds of things. Now, right now I've got the S&Ps up. I said the ag. That happens to be the S&Ps, and I'm looking at that. But if I wanted weather, I say, show me the weather. And voice activated.
Current prices. E-mini S&P 500 September is up 2.25 and last traded at 2.
So you're in your tractor, your car, whatever you're driving. And I'm sorry, I did do one for the ag, but I happened to put up the wrong ad. This is the one for the financial. And you can see it just works. It goes full screen if you want it. You can view your quotes by the different categories you set up all the way through it. I think you'll find it works pretty easy. How do you get it? And by the way, it works on both Android and iPhones. All you need to do is give us a call. You're going to need a user ID and a password, which we'll provide you. You can go to our website to sign up for it. Away you go. We have a staff here that'll be happy to show you how to set it up, but it's so intuitive you won't need anyone. It's pretty simple. And up here, of course, you can click there. It'll take you to the web page. Remember, all my videos for the public are on this. If you're a subscriber to my research, it even comes through this as well. I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.